Today we'll be discussing real estate market predictions for 2016. Hi, my name is Matt Barker, and this is Brandon Hedges. We're with the Barker and Hedges group at RE/MAX Results, and we'd like to welcome you to our video blog. Before we begin, we'd like to draw your attention to two links on our blog. First, if you're looking to find out the value of your home, please click on What's My Home's Value? Or, if you'd like to view current homes for sale in the area, please click on the Search for Homes link. Now, back to our topic. Before we get into predictions for 2016, let's just do a quick recap of the 2015 market. Overall, the Twin Cities market had its best year since 2005. Housing demand has reached a 10-year high, and we've seen home prices recover for most of the Twin Cities metro. In 2015, we saw the amount of closed sales increase by over 1%, median sales prices increase by 7%, and inventory be reduced by close to 18%. This is just terrific news considering where the market was just a few years ago.
Yeah, no kidding. It's been a big change this year, and I think we're going to see a little bit more of the same in 2016 as we roll through this new year. One of the things that's still going to be a topic is the low inventory. There's not a lot to pick from out there, and I think that's going to drive people to consider areas that are maybe a little bit further outside the city. We're going to see kind of a return to and a continuance of the suburban growth. A lot of the new communities that we're seeing pop up are more walkable than what we've seen in the past, meaning they have more grocery stores, coffee shops, dry cleaners, things like that nearby. So a little bit more walkable suburban communities are kind of the trend right now. Another thing I think we're going to see continue to change is that the condo and townhome market is really starting to rebound. That really took a hit during the downturn. It's been a little slower lagging behind single-family homes, and as there's less inventory of those, we're seeing people now move to the alternative in a lot of cases, which is a condo or a townhome. We're also seeing builders start to put new townhomes in the ground. When we see that happen, that's usually a pretty good precursor that is something that's coming soon. Another thing that's been a hot topic recently with the Federal Reserve moving interest rates up a little bit higher is what's going to happen with mortgage rates. We hear that all the time. The most recent increase in the Fed funds rate did not make a huge impact on mortgage rates because for the most part investors have already priced that into the market. And one thing to keep in mind is that mortgage interest rates are more directly tied to mortgage-backed securities than they are to the short-term interest rates that the Federal Reserve sets. And what that means is that we typically see in an economy that is growing and becoming stronger, we do see over time that interest rates on mortgages typically rise a little bit. And in an economy that we see the economy shrinking and becoming a little bit more stagnant, we do see mortgage rates typically tend to trend downward. So we may see a little bit of an uptick in mortgage rates over the next year, but I don't think it's going to be a massive change from where it's at. Because what you need to keep in mind is when investors are putting money into the stock market and the stock market is going up at a couple of percent, the mortgage-backed securities don't look as good if they're at 1% than they did a little while ago when the stock market was going down at 2%. So it's more has to do with what the investors do that way, and I think we'll see it be relatively level this year. We really appreciate you taking the time to watch our real estate blog today and checking out our predictions for 2016. Make it a great day.